All right, well, welcome everyone to tonight's presentation. Last night we focused on investing. The night before we focused on the theory of how to read a stock chart. Tonight, we're going to get into what is my favorite topic, day and swing trading. I will show you some of my strategies for being very active in the market, moving in and out in a relatively short time frame. With day trading, we could be in and out in 5 minutes, maybe 5 hours, but typically always out before the end of the day. With swing trading, it's typically 2 days to 2 weeks is our hold period, but again, much more active. So it's going to be taking the concepts that we've already talked about. So if you only have an interest in investing, but you're here anyway, trust me, this will still be valuable. And of course, if you have aspirations of either being a part-time or full-time trader, making your living from the market, then this will be great for you because I'm going to walk you through the strategies. So as we go through the presentation tonight, I'm going to talk about reward for risk a lot. All right. And this is the relationship between how much risk you take and how much reward you earn. I'm going to be showing you examples from today's trading action, and I will often show you the reward for risk earned. I want everyone to take particular note of that. It'll become quite clear why at the end of the presentation. So as I talk about reward for risk and I say, okay, this trade earned a reward for risk of 2 or 3 or whatever it is, take a note of that. And again, it will become quite important at the end of the presentation when we get into the economics of trading, the amount of capital you need, the success rate, how long it takes to build up your capital. All right, well, let's jump into just some basic knowledge so that you can understand my trading strategies and trades. So let's begin with what is day trading, what is swing trading. And as I said at the top, day trading, you're typically in and out within the day. Now, the normal market session starts at 9:30 a.m. Eastern time and it goes until 4 o'clock p.m. Eastern time. But in the last couple of years, I would say since COVID and even more so now, the pre-market and the aftermarket have also been very good trading sessions. I never used to trade the pre-market. I never used to trade the aftermarket. And now I trade them quite often because some of the best trades are coming at that time. Now that's good for those of you that maybe can't put up the time to be in front of the screen all day. Maybe you can trade in the afternoon. All right, then trade the aftermarket because every day there's a couple of good movers in the aftermarket. Now you're probably wondering, when is the aftermarket? Well, the aftermarket session starts at 4 o'clock p.m. Eastern time, and it goes until 8 o'clock. Now, I'm on the west coast of Canada, and for us, that's from 1 o'clock until 5 o'clock. And so for me, oftentimes it's a good time because I can do some trading before maybe I pick my son up at school or something like that. We also have the pre-market session, which for me is a little more challenging because it starts at 4 a.m. Eastern time, although most of the action starts at 7 a.m. Eastern time. So if you can trade from 7 a.m. Eastern until 9:30 a.m. Eastern, which for me is 4 o'clock a.m. until 6:30, it's not always great. I often do trade early. I'll get up at 3:45. For those on the East Coast or in Europe, these are great trading hours. And you can do a lot before you go to your normal job, let's say, as you're building up your capital, gaining your experience. So one of the great things that we've seen happen in the market over the last couple of years is just the extension of the time to trade. You do not have to trade all day. There are times of the day when there's opportunities. All day long there's opportunities, but there's certainly peak times. I would say from 7 to 9:30, about 7 to 10, there's some pretty good opportunity. And then later in the afternoon, there's some good opportunity, then in the aftermarket. But really, there's trades that happen all day long. You just have to be patient and know what to look for. One of the key things with day trading is that you have to be very, very fussy and picky. And so I'm going to try to emphasize some of my rules tonight and the importance of trading a very limited number of stocks. Most stocks, most of the time, are not worth day trading. Because most stocks, most of the time, just don't have the volatility, they don't have the action, they don't have the emotion that creates opportunity. And so what I'm going to teach you tonight is what to look for, and I'll show you through some of my strategies as well. Now for swing trading, pardon me, swing trading is not as time demanding. Most of the swing trades show themselves in the first half an hour, and well, maybe the first hour of the trading day. So if you can be in front of the screen from 9:30 until 10:30 Eastern time, most of the swing trades come then. They do show themselves all day long, but I would say 70, 80% come in the first hour, and sometimes even in the pre-market. So there is a strategy for everyone. No matter what your time schedule is, no matter what your interests are, there is a way to make money in the market in the short term. And I'm going to try to show you tonight how to do that and walk you through some different strategies. All right. Now, swing trading, holding stocks for 2 days to 2 weeks. We'll talk a little bit about that tonight as well. Now, the next thing that we're going to show here is just some charts from today. And this is one of the hot stocks of the day. And I actually cut it off before the close. This stock actually went up a lot more later in the day, and I'll show that a little later. But what you're looking at right now is a 1-minute chart of this stock, SCNX. Okay, so SCNX, this is a 1-minute chart, and it started moving at about 8 o'clock this morning. You can see it moving up there at 8 o'clock. And then through the day, you can see there's these pink and yellow dots, there's these blue dots. All of those things have meaning. I will teach you what those are for later as we go through. But this is a typical day trading chart. Most of the time, I'm watching the 1-minute chart. Some of the time, I go as short a time frame as a 10-second chart. And so, for example, if I was trading the 1-minute chart, I might be a buyer here and a seller up here. But on a 10-second time frame, I might be a buyer right here and a seller right there. So just a much shorter term time frame. But in that instance, that stock there moved from $1.03 to $1.35. That's a 30% gain in 10 minutes. And this is one of the great things about day and swing trading is you can make very big percentage returns in a short amount of time. You can also, if you're on the wrong side of the trade, lose very quickly. And I want to emphasize, if you're in a day and swing trade, you got to know what you're doing. And my job as a teacher is to teach you what to do. But when you start trading, it's really, really important to make sure your number one goal is capital preservation. We don't want to take big losses. And to get to that level of not taking big losses, you have to practice. So please, I always like to say this right up front. Day trading is wonderful. You can make a lot of money day trading, but you can also lose a lot of money day trading. And what is essential is good risk management and practice. Never ever practice with real money. Start out, let's say I teach you my strategies, you take one of my courses, I teach you. I want you to start by practicing on paper because there's a learning curve here. You wouldn't, if you were just learning how to ski, you wouldn't go down a double black diamond run in the Rocky Mountains. You start on the bunny hill. Same thing with trading. You got to start on the bunny hill, learn, practice, low amount of risk, and as you get better, you can scale up your risk. And I'm going to show you how to do that at the end of this presentation. And as I said, you can get to the point where you make $100,000 a month. You can get to the point where you make $100,000 a week, but it's baby steps. You're not going to get there in 2 days, all right? So it's baby steps. I don't care if you have $10 million to invest in the market. You're going to start on paper. You're going to start with a small amount of risk, and you're going to take it one step at a time. So on the screen there, that was a day trade from today. Here is a swing trade. We'll talk about this in more detail later as well. But in this instance, this is a 13-minute chart. People always ask me, why a 13-minute chart? I like 13-minute charts because there are 30 13-minute candles in a day. So if this is a day right here, from here to here, there are 30 13-minute candles in that day. I just like the symmetry of it. Just like there are 13 30-minute candles in a day. So long time ago when I was taking classes from TradeStation on how to use their software, the guy running the class sort of highlighted that to me, and I've stuck with 13-minute charts forever. It allows me to get in a little sooner than the people that watch the typical swing trading time frame of 15 minutes. All right, so last night we talked about how I reverse engineered the stock market. We'll touch on that a little bit again. When I develop a strategy in the market, I start with the stocks that I wish I would have bought. So right now I'm working on a new strategy, a very short-term strategy. And each day I'm writing down or taking note of the companies that make the biggest moves in a relatively short amount of time. So every day there's 3 to 5, sometimes even more actually, that'll make moves of 30%, 50%, sometimes 100% or more in less than an hour. And so it's very lucrative if you can find these stocks early and ride them without taking stocks that don't do that. In other words, avoiding losses. And so I start by looking at all the stocks I wish I would have traded. And then I reverse engineer to look for patterns that occur early in the trend. And I talked last night about how I did that for position trading. And I spent, months and months going through data, going through charts, looking for common characteristics of stocks that did this. And for position trading, the common characteristic was abnormal price action with abnormal volume from low price volatility. We talked about that in last night's webinar. And if you missed that one, make sure you go watch it on the Stockscores YouTube channel. So when I'm day trading, I do the same thing. When I'm creating a new strategy, I look for patterns that occur over and over again. And these things happen over and over again. And I've been doing this for 35 years. The patterns don't change a lot. It's all human psychology, fear, greed, and the unfairness of markets. That's kind of the basis for how I approach the market. So as we go through tonight, I'm going to show you trades from today, from the last week or so, and you'll see some common characteristics. And I've built indicators to identify these characteristics early. That's the thing that gives us an edge. We can find these things before most people do. And then we have a very strict discipline on how to manage risk, where to take the loss if it doesn't work, where to take profits, where to sell when it's a winner. We all have it's very important to have very good rules, discipline, emotional control. The great challenge in any style of trading, position trading, day trading, swing trading, but particularly with day trading, is mastering yourself. All right. I can write the rules down for my strategy on a napkin. They're not that complicated. They take some time to learn. They take some time to practice, but it's not rocket science. What is challenging is overcoming yourself, taking the emotion out of it. You see, our brains have this little thing called an amygdala. The amygdala is our fight or flight brain. And when we take risk in the market with money and we're worried about losing, our thinking brain, which is the prefrontal cortex, this part up here, that turns off, and the little almond-sized amygdala turns on. And when that happens, you will make stupid decisions. In the evening, after the trade's over, you look at those decisions and you'll go, why did I do that? It breaks every rule. Why on earth did I take that trade? And the reason is because you're a normal person. And so one of the things that I have to do as your teacher is help you overcome that. All right, so that's basically what I started out doing. I'll look for stocks that made big moves like this. This is a stock from today. And I can see that there's some important characteristics. You'll notice on this chart, there are these little pink and yellow dots here and there. That's my own indicator. It's called an action candle. And it looks for statistically significant abnormal price action. Now, not all action candles are important. We like the action candles that break from low volatility. So this one here, this one's good, this one's good. These are the ones that lead into stronger moves. And so these are the ones that we want to focus on. And as I go through some of the strategies, we'll continue to highlight these action candle indicators. All right, so what is the most important factor for picking hot stocks? It's not the company being good. It's not having good management. It's not having good earnings. None of those things matter when you're day trading. All right, fundamentals do not matter when you're day trading. When you're day trading and swing trading, you're trading situations. You're trading situations where the demand for the stock from buyers is very strong and the supply of stock from the sellers is weak. And what happens when you have strong demand and weak supply in the short term, prices can go up very quickly. They will often come right back down again. Most of the stocks that I trade a week from now will be below what I bought them at, or certainly not much higher. But along the way, they'll make some big moves. I've seen stocks move 1,000% in a single day, and then 3 days later, they're right back where they started. what do you think that means? It's not about the fundamentals. It's about human emotion, the madness of the crowd chasing stocks higher, and eventually the bubble bursts. Some people are left holding the bag and they ride the stock down and take the big losses. All right. I don't want you to be one of those people. I will teach you how to not be one of those people. But you have to break this habit of being a normal human being. I know that sounds ridiculous, but you cannot do the normal human being things. All right. And one of the things that will help you overcome that is having a proven strategy written down, not just in your head. It's got to be written down with a checklist, because the great enemy when you're trading in the market is yourself. And you will convince yourself of things that do not exist when you get emotional. And so that's why we have to have a written checklist that we go through and say, okay, does it do this? Does it do this? Does it do this? I've been trading for 35 years. I still go through my checklist when I'm looking at a stock. And I know, some of you joining me this evening are on my active live service. You will hear me recite the rules as I'm assessing a trade. I'll say, is it abnormal? Yes. Is it this? Is it that? I go through the rules, and those that have taken my courses and watch me trade the market will know that I have this habit of going through that checklist. So it doesn't matter if you're brand new or if you've been trading for a very long time. It's very important to make sure that you overcome yourself. So the number one criteria of a hot stock is abnormal activity. The thing that makes a stock most worth trading is that it's trading with abnormal volume and abnormal price action. It has strong liquidity. When I say strong liquidity, I mean it's being traded by a lot of people. So if we have a stock that does, say, 100 trades in a 1 minute interval, that's kind of liquid. It's not bad, it's pretty liquid. But 1,000 trades in a 1 minute interval, that's a stock that's hot. And sometimes we get stocks that trade over 5,000 times in a 1 minute interval. That is a feeding frenzy. Those are the kinds of stocks that we love. But it's not enough to have that, because Apple Computer trades thousands of times in a 1 minute interval, but it's not abnormal. All right. So we want a stock that normally trades 5 times in a 1 minute interval, and then all of a sudden it's trading 500 times. That's the abnormality. And then the price action is abnormal. If the stock normally moves up or down a dime or 10 cents in a day, but today it's moving up $1, $2, we know something's going on there. And that's where the crowd comes into the stock. They're chasing the stock higher. They're emotional. And that's what causes stocks to go from $1 to $5 in a single day. I've seen it happen. It happens almost weekly. Daily there's stocks that make big moves, but there's stocks that make huge moves, a couple of them a week. And those are the kind of stocks we want. Stocks that can make more than 100% gain in a single day. That's what we're trying to find. And that's what the tools that I've created will identify for you. Now, the next point is here is an example. Sorry, before I go to the next point here. This is SCNX again. And here I would just want to show you those factors I talked about. You can see that the price action is abnormal. It's moving very strong. It started here at the day. It started the day pre-market at 55 cents. It topped out at $1.72. So that's almost a 300% gain today. But even in the opening, half an hour or so right in here, it went from 55 cents to 98 cents. So you can tell that it's in play. So that's the abnormal price action. You can also see that the volume is significantly higher, right? You can see the volume is much higher than it was the previous day. So that is the abnormal volume. And then the last thing is liquidity. These bars right here, this is the number of trades in a 1 minute interval. So this stock at some of these 1 minute intervals was trading 10,000 times in a 1 minute interval. Now I'm going to come back to this stock later, because this chart is actually cut off at about 215. I'll show you what happened at the end of the day. It made a huge move into the close. And it was the kind of stock that we want to trade because it was abnormal on price and volume, and it was liquid. I have no idea what this company does. I couldn't care less. What I know is that people were really excited about it. They're chasing the stock higher. And I just look for patterns in the chart that I know from looking at thousands and thousands of charts over many, many years, I know that these patterns are predictive. Do they work all of the time? Nope, absolutely not. Every trade I take, I expect that there is a chance that I'm going to lose. 30, 35% chance that I will lose when I apply my rules properly. But that also means a 65, 70% chance that I will make. And then it just becomes a game of risk management. You know, lose $1, make $2. 35% chance of losing $1 or a 70, 65% chance of making $2. Is that a good bet? Well, I'll tell you, it's a lot better than a casino where the odds are always against you. So when we approach the market, we want to have a strategy that has a positive expected value. That means if you do it 100 times, it should make you money. If you go play blackjack, unless you know how to count cards, the game of blackjack has a negative expected value. Playing a slot machine, negative expected value. Playing roulette, negative expected value. That's why there's all those beautiful big hotels in Las Vegas. They're not paid for by taxpayer money, they're paid for by gamblers losing. In the stock market, most people lose. Some people make a lot. The people that make a lot have strategies that are effective, that have a positive expected value. The people that are losing don't have good strategies, or more than likely, they let their emotions get the better of them. And so again, emotional control is essential, and trading the right stocks is essential. So the last thing that I have listed here, the most important factor for successful trading is consistency. It is being able to be disciplined, to be focused, to have a good strategy that works over a large number of trades. It's not going to work one trade at a time. It works over a large number of trades. All right. I don't know. Every time I take a trade, I don't know if it's going to be a winner or a loser. But I know if I do 10 and I got a good strategy, I'm going to make 70% of the time a profit. 30% of the time I'm going to take a loss. And then I know if I'm consistent with my application of good risk management, when I take those losses, relatively small, when I have my profits, maybe 2 or 3 times the size of my average loss, that's how you make money in the market. All right. So we're going to go through lots of examples. We're going to go through some of my strategies, and let's get into that now. But here is an example of the risk-reward relationship on a trade. So this particular entry point was here just after 9 o'clock. I'll explain this strategy in a little bit. And in this case, the entry point is the white line. The red line is the stop loss point. So that was the plan to lose. All right, this trade went up as much as 10 times its risk. So if you risked $100, you made $1,000. If you risked $1,000, you made $10,000. Now, I shouldn't say that because we would never sell up here. That's the dream. The selling point was actually right in here, or maybe even right in here. But even there, that's 5 times risk, or 8 times risk. So risk 1,000, make 5,000. Risk 1,000, make 8,000. We never sell at the highs, and don't let anyone ever tell you that you can sell at the highs consistently. It's not realistic. All right, here is a swing trade using that same tactical thinking. So we had an entry point right here, and this is one that we did in my active live service. It's a strategy called an alpha echo. I'll talk a little bit about that later on, but you can see there's a pink yellow dot there, and it broke from a right pattern. And in the next day and a bit, it went from 259 to a high of 430 with a sell point right about there at 368. And then it did another one over here, little break again, and I see a little pink dot there, and it ran for another game. All right, so remember I said at the top of the presentation, I wanted you to think and recognize my discussion of reward for risk. So remember on this trade, I said it made either 5 times risk or 8 times risk, probably more like 5 times. 8 times would be the dream, but most people wouldn't stick around for that long. So this one made 5 times risk. All right, so keep that in mind. This one made 3 times risk and then maybe 2 times risk on the second trade. So 3 times and 2 times. You'll see why when we get into the end of the presentation, where I talk about how you can get to $100,000 in a month, why those risk reward numbers are so important. All right, so what is my approach? I am a strategy-based trader. I don't trade on tips. I don't trade on information. I don't read news releases. I don't listen to people tell me what's hot. I don't go on to Reddit or other chat forums and listen to people. I simply have algorithms based on math that look for high probability trading opportunities. I want to minimize human judgment because being human is not good in the market. Being human will hurt you. All right, so I want to take as much of human judgment out of the equation as I can, and we do that by being an algorithmic trader. We're making trading decisions based on rules, not emotion. Now that's easier said than done. All right, I have rules, I still get emotional sometimes. It's very easy to fall into that trap. So if you get emotional in trading, realize the good news is you're normal. The bad news is you have to overcome that, because being an emotional trader is not a very good way to do it. Now, these algorithms and the processes took me 8 years to build and develop, although I've been refining them for 35 years. But the current iteration, I'll tell you the story. I started trading when I was a university student, and I took a class in university where we looked at the mergers and acquisitions that were going on in the 80s, and we realized that the stock market wasn't fair, that some people were trading on inside information, and that using math, we could predict when these big deals were going to come, because you could see that this abnormal trading activity often came before the big jumps in the stock when a merger was announced. So let's say one company is buying another, they're paying a premium, the stock might jump from $10 to $15 overnight. But before that happened, the stock would start to move up abnormally with abnormal price and abnormal volume, because some people knew before the deal was announced. And so when I left university, I took the math that we learned in that course and I started applying it to stock trading of lower price stocks. I was trading penny stocks mostly. And then I adapted it to day trading and to swing trading. And I built a website called Stockscores.com. This is all 20, 25 years ago. And the whole basis of that was this class that I took in university, where we basically proved with math that there were people trading on inside information. And so I still use that same math today. The formulas that I use today are from 35 years ago, well, 33 years ago. All right, so it's pretty cool that these concepts have survived for a long time in the market, and still are effective today. Now, so that took me 8 years to figure that out. Then in 2016, I decided to pack up my family and we moved to Maui. We sold our big house and we rented a condo on the beach in Maui. And while I was there, I started to really refine my algorithms for day and swing trading. I put a lot of effort into the math. I hired some programmers that were specialists in a program called TradeStation. And we wrote these algorithms. When I show you those charts with the pink and yellow dots and blue dots, I'll elaborate on those in a little bit. But that was all done when I was sort of hanging out on the beach for a year in Maui. And then I moved to Whistler for a little while and skied and mountain biked and just took a sort of a midlife break before I got back into the market. All right, so that's the story behind it. This is one of the tools that I created. There's a lot of numbers on here, and for most of you, it's probably overwhelming to look at. This is what we call our active live screen. This is a program called TradeStation, and it's running algorithms all day long. I just did a screen capture, but this is blinking all day long, and it's looking for stocks that are moving abnormally. And you can see at the top of the list here, SCNX, over here, SCNX. Here it is right here, SCNX. So that stock's all over the place, SCNX over here. So the reason it's at the top of all these lists is because it was one of the most abnormal stocks today, and certainly the best trader of the day. Well, this computer program is running that analysis for me, and then I get my signals from it. This is my bat cave, my trading desk. I've got 3 42-inch monitors. These big ones right here are big 42-inch monitors, 4K screens. I've got lots of charts on them. And then I've got the active live screen running right there. I'm watching that for my signals. I've got my main trading screen here where I'm analyzing my charts. Got some more charts over here. I'll usually have my brokerage platform open over here, and I'll have our active live chat where people are asking me questions and things like that. That would be open over there. Here is a good example of the kind of stocks we love to trade. This is a stock that perked up yesterday after hours. So it started about just a little after 6 o'clock Eastern time. You can see nobody cared about the stock. It's pretty boring. And then it starts to make these action candles, these pink and yellow dots. We call those action candles. And you can see the volume starting to ramp up. So this screen right here, actually I have another one for after hours, but it looks similar. It starts to ring bells and tell us that there's a stock that's in play. And so we find it early on and we try to jump in either early or on pullbacks. And so these blue dots here are pullback breaks. So anytime you see a blue dot, it's because the stock pulled back and then broke the pullback, and there's a little trade in there. Pullback, break a pullback, a little trade in there. All right, so we'll elaborate on that in a little bit. So my strategies, I start every day with a little pre-market assessment. What's the market like? What's moving? What's hot? When I sit down at my desk, some mornings I'm up really early, 3:45 my time. Some days I'm a little lazy and I don't come to my desk until say 6 o'clock Pacific time, 9 o'clock Eastern time. And I sort of assess the market. Look what's in play, what's in action, what's behaving abnormally. And then I just build watch lists, open up charts on the screens that you saw here. So you see here, I've got all these charts opened up. I'm watching the stocks that are in play, and I'm watching them for certain signals that are applying my strategy. So we have a day trader strategy, which is our first entry. Early riser is typically our second entry. We don't do hit and runs a lot these days. IPBs later in the day, superheroes later in the day. Alpha Echo is a swing trade, and simple swing is a swing trade. I have rules for all of these strategies, and we're going to go through some of them now. So let's start with the early riser. So this is where I buy the pullback, the first pullback, after a stock starts to behave abnormally. We're getting most of our signals on this strategy in the pre-market. And I've even got a faster version than this where I do it on a 10-second chart. It works well in any market condition. There'll be times when it's really busy. There'll be times when it's a little slower, but every day there's something doing this. And the basic idea here is this. You've got a stock that's boring. Okay, it's going sideways. It comes alive with abnormal activity. Okay, you can buy this. That's the day trader strategy. Or you can wait for the pullback and buy the break of the pullback. And I've got an indicator that fires right here, and I've got an indicator that fires right here. So once it tells me that the stock's abnormal, then I'm watching it for the break of the pullback, which might be right there, and we then ride the next wave up. Most of the signals for this strategy occur early in the day. In fact, pre-market, there's quite a few, but also in the aftermarket. So for some of you that maybe want to trade after the normal market closes, we get a few of these most days in the aftermarket, usually 2 or 3. It utilizes a couple of special indicators and windows on my active live screen. So if I can go forward here. You can see here there's a window called Moonshot. So we use that window, and then you can see right here, early riser. When there's a crossover, a break of a pullback, there'll be a red X in this column. Now there's none right now because I took this picture earlier today and there just wasn't any at that moment, but that's how we find these. My preference for this strategy is I build a watch list from this screen right here, and then I just monitor their charts. So these top 2 stocks, SCNX and MSAI, they both gave good signals on this strategy today. And here's an example. So remember I said you've got boring sideways trading. That's right here. And then you start to trade abnormally. That's right there. You can see the pink and yellow dots are starting to fire, and we're getting alerts on that active live screen when that happens. There's a little voice that comes on and says, liquid mover. I have this little computer voice that says that, and we listen for that. And then I go look at the chart and I can see the volume coming in, so I know something's going on. And now I'm going to wait for the pullback and the blue dot. So there's my little blue dot. That's called the wave up indicator. It's my own indicator. You won't find this in any charting program. It's my own concoction. I'll give it to you. If you are my active live student or my active trader student at Stockscores, you get all these indicators. People are always asking, do you have to use TradeStation? If you want to use my indicators, you have to use TradeStation because I've written them for TradeStation. You don't have to have TradeStation, however, because you can just watch my active live screen. It's something you can subscribe to, and it'll give you all these signals. So most of my serious traders are doing both. They're on active live, getting the signals, but they're also running TradeStation themselves so that they can see the indicators on the chart. Now, people always ask, like I have a lot of Canadian subscribers, I'm Canadian as well. We Canadians cannot have a brokerage account with TradeStation. So if you go out and you try to open a brokerage account with TradeStation, you're Canadian, they're going to say, sorry, we can't do that. However, what they don't tell you is that you can subscribe to TradeStation. And I've negotiated a special price for my students, $79 a month, to use TradeStation. Now, if you're in the US, you can just go open a brokerage account, you get it for free. If you're in Australia, I believe you can get a brokerage account with TradeStation. Many countries in Europe, you can get a brokerage account with TradeStation, and then it's free. But unfortunately for us here in Canada, there's laws that say we're not allowed to open a brokerage account with a US broker. It's silly. It's very dumb in my mind, but it is what it is. It's been like that forever. So I just subscribe to it. And I actually have 2 TradeStation accounts because I'm running multiple computers doing this analysis. There's the computer that I trade from, and then there's the computer that runs Active Live. Those are both running TradeStation, and I subscribe to it for that. All right. So if you're Canadian and you want to use TradeStation, you just send me an email. I'll send you the person's contact to get that special pricing for my Stockscores students. All right, so that is an early riser. Again, boring, goes up, pulls back, it's trading abnormally. Blue dot, wave up indicator, entry point at the white line, stop loss point at the red line. And in this instance, like I said earlier, it went up 6 times risk with a sell signal at 5 times risk. And then there was another signal here, buy there for another +3. So 1 trade +5. Remember, write these things down because they're going to become important later. And +3 later on in that one. Even if you only did 1, +5 on this stock today. Now, the next strategy we'll talk about is the intraday pullback. This is very similar. The difference is that the pullback is longer. So we've got a boring stock. It goes up and it pulls back, but it pulls back in 2 steps. And in doing so, it makes a downward trend line like that, and then breaks the downward trend line with something called a message candle, which is an abnormal price move. Again, I have an indicator that will plot this on your chart for you. It's going to put a little pink dot on the chart. That's something we call a message candle. All right. It's a more conservative pullback break. Conservative is not the right word. A fussier pullback break. And we do these more so later in the day. So not typically in the opening hour, but after the opening hour through the middle of the day is when we will do this particular strategy. And for that strategy, we have a window right here. You see there it says IPB. That stands for intraday pullback. All right. And it will ring a bell every time there's an intraday pullback. So these are all the times that SCNX made an intraday pullback. Now, they're not all valid. We have to always inspect the chart visually to make sure it has the right pattern. But every time there is one, you'll get a little voice that says IPB, and a window will pop up here. You can see it says IPB Finder, IPB Long. That window pops up for, I think, 15 seconds or maybe 5 seconds. And so you get an audible alert and you get a little visual that says, go take a look at that stock. We go take a look at the stock. We assess the chart to see if it meets the rules, which I teach you what to look for. So here's an example. This stock has a price peak right here, and it has an inflection point right there. You'll remember on Tuesday, we talked about inflection points. I can draw a line across those inflection points, and I can see that that line is broken with a little pink dot candle. So that would be an IPB signal. There's actually one here as well. This one was a little better because there was a rising bottom into that. And this went up 2 times risk. So maybe you sell it at 1 times risk. All right, so we have a trade here that made 1 times risk. Our last one made 5 and 3. Just again, keep track of these things. You'll understand as we go through this. Next strategy, superheroes. So this one, we're looking for stocks that have been abnormal for a while through the day. We're looking for stocks that are very liquid, very abnormal, and then break from a predictive chart pattern. This strategy is actually very similar to a position trading strategy I do called the Stockscores Simple. So if you're an investor, you would apply this sort of strategy to a daily chart. If you're a day trader, you're going to apply this strategy to a 1-minute chart or maybe a 2-minute chart. All right, so last night I said it's worth your while to come to this, even if you are only an investor, because these crossover, the strategies crossover. So this screen right here will fire indicators on that strategy here as well. In the IPB finder, it'll often fire there, and it will just give us a list of the stocks to watch right here on the Alpha Gainer screen. So this screen right here, we're watching these key stocks because they're the stocks that are in play. And I just open up a chart for them and wait for patterns to form. And here's SCNX again, and here's the afternoon run. See, there's a little pink and yellow dot there from low volatility on a stock that was quite abnormal today, and that was at $1.42. This ran into the close up to 9 times risk. So at the close, it was up +9. So again, if you risked $100 on this trade, it made $900 by the close. And that went from just around 2:45 until 4 o'clock. So in an hour and 15 minutes, it made 9 times risk. And again, I want you to remember 9x. Okay, just keep a tally of all these RR earnings on some of these trades today. It'll be important later on. Now, the simple swing is the swing version of the day trader strategy. So the day trader strategy looks for an abnormal break from low volatility, which in this case would be like back here. The swing version of that is to look for an abnormal break from low volatility on the 13 or 30-minute chart. So for someone who is not wanting to watch the market real closely, you can sort of keep an eye on your holdings with your phone, but you're not going to be that, sitting in a chair all day watching the screens, then this is a great strategy. Most of the signals come in the opening hour. So if you can monitor the market from 9:30 till 10:30, you'll get most of them. Some come in the pre-market, but generally 9:30 to 10:30 is the best time. We're typically out, usually within a week, but I say here within 3 weeks. Sometimes they go longer. And you're just looking for action candles on a 13-minute chart. Now, the next swing trading strategy is called the Alpha Echo. This is the equivalent of the early riser strategy that's a day trading strategy. So remember, the early riser strategy was boring. Let me do that in blue. Boring, comes alive, pulls back and breaks. Okay, we did that on a 1-minute chart. We can do that on a 10-second chart. We can do that on a 2-minute chart. Generally, we do it on a 1-minute chart. The Alpha Echo is the same thing, but on a 13-minute chart. I'm going to show you an example in a moment. Most entry signals for this strategy occur early in the day, opening hour, sometimes pre-market. We're usually in and out within a week. And we're utilizing the swing trader screen. So this screen right here, we're utilizing that one for our swing alerts. Okay, in the opening half an hour, I go through all of the signals and I tell you which ones I like. Because there's quite a bit to do in the opening half an hour. Just there's lots of them. So later in the day, there's not that many signals, so anyone can do it because you have enough time. But early in the day, I try to help because I've done this a long time. I can go through them quicker than most people. And so I will go through those and I'll call out the ones that I like. You'll see here that I've got a list of them. And then there's something here called better swing. When I like a swing trade a lot, I'll put it on the better swing list. There wasn't any today. I didn't like anything enough. But an example of one that I did as a better swing is this NUAI. Back on October 14th, it went up, it pulled back for 2 days, and then it broke the pullback right there, and that led to this nice move where this got up to +4, but the sell signal at +3. And then it did it again, right here, a little pink dot, breaking this pullback, pink dot, and it goes up 1, 2, 3, 4 times. Unfortunately, this one gapped down, so our exit on this one was at +2. So we got a +3 and a +2, and everyone's keeping track of these, right? Okay, so that's the Alpha Echo strategy. So what do you need if you want to learn this stuff? You need to learn some core skills, knowledge. You need to learn the basics of the stock market. When I teach people, I assume they know nothing. I'm going to teach you how to read a chart, the theory behind what's going on in that chart, why stock prices change, what stock price is based on. I'll teach you analytical tools. We touched on that on Tuesday during Tuesday's webinar, where we talked about the 6 elements of chart patterns, price trends, abnormal activity, those sorts of things. You need good risk management, so knowing where to take a loss, where to enter, where to take a loss, and how to use that to size your position. That's all part of money management. How to develop a strategy. I've done all that for you, but some of you may want to develop your own strategy. And so I'll teach you how to do that. But again, most people don't. I develop the strategies and people just do what I teach them to do. And then the mechanics of actually entering the trade, moving in and out of the trade, what kind of orders, there's little things that maybe most people don't know. You cannot do a market order in the pre-market. So you have to set a limit order. What is a limit order? What's a market order? All of these things are things that I teach. Then you need strategies. So I've spent 35 years trading. I've developed the rules for when to enter, when to exit for, half a dozen or more day and swing trading strategies, plus investor strategies, and very specific rules, not just buy a chart that looks good. That's not a specific strategy. We have to be very specific in what makes a good entry signal. And that's why we use algorithms. That's why we use these candles and these little dots on the candle. They signal something. The computer does most of the work. It does the math on thousands of stocks running in real time. And then we apply those indicators to every stock in the market, and it gives us those signals when that happens. And then we go in and assess the chart. We do the last little bit of judgment. We size our positions. We manage our risk. These strategies are well tested. I tell you what's working now. A strategy I did 2 years ago, maybe is not something I'm doing right now. But I can tell you a strategy I did 5 years ago and then I stopped doing is now back in play again. A strategy I was doing a lot 2 months ago, not doing it as much, but doing a different strategy right now. They're all based on the same concepts, but we adapt to the market we have. As I said at the top of the video, I never used to trade pre-market. Now I'm doing it because that's where there's good action. I never used to trade aftermarket. Now I'm doing it because that's where there's good action. So we're always adjusting to the market. And we use statistics. We don't use human opinion. We use the power of data. So this is an example of a spreadsheet that I have. It's got thousands and thousands of lines of data where I am applying my rules to assess whether a strategy is effective or not. And I can do what-if analysis. This is one of my screens where I can figure out what the RR earned for the day is. So for example, 2nd of October, 15.3 RR for that day on 4 trades. Remember RR, that's reward for risk. We've been talking about that all night long, and you're going to see in a minute why that's really important. What else do you need? You need tools. So for position traders, I have something called a market scanner. We're going to show these tools on Saturday, so make sure you're registered for Saturday's webinar because I'll walk you through these tools. The tools I built for Stockscores, the tools I built for TradeStation, the importance of a real-time charting program if you're day and swing trading, the active live tool, which is really the best tool we have for day trading. You're watching my analysis screen by webinar running every day, and I will have that analysis running for you so that you can just listen to little voices say signals as the day progresses. You need process, a step-by-step plan for implementing the trading strategy. It has to be mechanical. It has to be executable. I've seen people on the internet where they are in and out of a stock in 12 seconds. Well, that's pretty hard to do. Some people can do it. If you've got a lot of experience, yeah, you can be in and out that fast. But for most people, and most of my students are normal, regular people trading from their home or aspiring to trade from their home, being that fast is just not that reasonable a thing to do. So most of my strategies, some of them you have to be fast, but not that fast. Like maybe you have to get your order filled within 20 or 30 seconds. That would be the quickest. And we've got tools to do that. Using hotkeys, we can be in and out of a stock very quickly. But we have to have a strategy that is possible for normal people to do. There's computerized strategies being run by companies like Renaissance and Citadel, which are huge multi-billion-dollar algorithmic trading places where they're executing trades in microseconds. Well, I'm not going to be able to do that. You're not going to be able to do that. So why learn the strategy? It's not possible. We don't have the equipment, the connection to the exchanges to be that fast. It's just not possible. So we have to have things that work. And that's, when I teach people, I'm teaching people things that I do that are possible for most of us to do. We want to be efficient. We want to remove emotion because, again, our enemy is ourself. So the process when we're trading is we think about market factor. Is the market helping or hindering? We are looking through the market for action candles, stocks that are behaving abnormally. We then assess when we get a signal whether it satisfies our other rules. We enter the trade. We monitor for an exit signal. And then we ultimately exit the trade when we get a sell signal. Now, the active live service automates a lot of this process for you. So you really can just focus on making the trades and assessing the trades. The actual signals, the analysis, that's being done by the computer. What else do you need? You need capital. All right, you need to be able to buy stocks. Obviously, you need money. But I will say that, like I said at the top, if you have $10 million that you want to start trading with, I want you to start with $0. I want you to practice. Either practice on paper, put trades into Excel. We have a simulator at my other website called Stockscores.com. Just practice with no money because your number one goal is capital preservation. All right. If you go out of business because you've used up all your capital, you're out of business, right? So you may as well get good at it with either no risk or a very small amount of risk. Maybe trading $50 a share in risk or something, a trade in risk as you get started. And then as you get better, you're going to increase your risk. So let's say at $0 of risk, you make 10 times your risk, 10 RR. Okay. So then you increase your risk to $50. You make 10 RR, which means you've made $500. So then you increase your risk to $100 and you make 10 RR and you've made $1,000. Now you've got some market money to serve as a buffer to protect your capital. So you increase your risk to $200 and you make $2,000 at that level and you move up. Now let's say you lose money at this level. Okay, you got emotional, go down to the next level and start again. Or maybe go down a couple levels and start again. So it's a process where we are desensitizing ourselves to risk. We're being responsible by not taking a lot of risk when we're learning, when we're just getting our experience. And then as you're successful, as you're gaining experience, as you're putting money in the bank from profits that you've made, you're going to increase your risk. And I'm going to walk you through this and what kind of performance you can look for over time if, this is a big if you are consistent. If you can consistently make money, making 10 RR, 3 RR a day, 5 RR a day, 25 RR a week, 10 RR a week, whatever your goal is, all right? You're going to set that, you're going to get in there and just try to be consistent. And that requires emotional control, good strategies, good knowledge. I can do most of that for you. I can't control your emotions, all right? That's the part that you have to do. I can tell you how to control your emotions. I can tell you how to make a trading plan, how to have a checklist, how to not take more risk than you're comfortable with, all of these things which will help you control your emotions, but you still got to do the work. And that's, what obviously you have to bring to the equation. So what will help you succeed? Trading is simple, but it is not easy. I want you to start slowly, walk before you run. The market's here forever. So in your first month, take it slow. Learn, practice, learn to focus. If you're determined, if you're disciplined, you can make lots of money in the market. If you're a gambler, you'll make money in a hot market and you'll give it all back in a normal market. So don't be a gambler. Follow a strategy that is proven. If you want to become an active trader, you can do what I did, which was spend 8 years trying to figure it out on my own. I paid a lot of tuition to the stock market university, a lot of expensive lessons before I was successful. Or you can learn from someone like myself, where I've got 35 years of experience and 25 years of experience teaching others how to do this. I've taught thousands of people over the years, and I know how to teach people. Most everyone makes the same mistakes. You send me 5 of your trades, I can usually tell you what emotional hang up you have, whether it's the fear of missing out, or lack of willingness of taking a loss, whatever it is. Just by looking at your trades, we can figure that out. So in order to teach you the knowledge, we have the Stockscores Education Center. Now, we showed this last night. I'll just jump into it quickly again. If I go into the Trader Training section, go to Education Center, and we're just going to scroll down this time to the Active Trader section. These are all the strategies for Active Trader, plus the exit strategy, plus some special videos and lessons on using TradeStation. Okay, so there's a bunch of lessons there. And again, if you wanted to learn the early riser strategy, just click on the lesson and whoops, that one's actually in another spot. But there's a video here on the early riser. There you can see me in front of my desk teaching that particular lesson. Let me just close that down. So it's all there, one step at a time. You go through the foundation, then you go through the lessons, like the strategy lessons, all inside the active or inside the Education Center. Now we have the investor course online. We talked about that last night, so I won't talk about that too much. We will go into this in more detail on Saturday. Active Trader course, that's where you learn your active trader strategies. We'll go into that in more detail on Saturday as well. And then there's mentorship. So if you want me to walk you through all of this material, particularly if you have the aspiration of being a day trader, a swing trader, you want to make a career out of trading the market, I think the mentorship is a great option, because over the next 6 weeks, starting November 11th, 2 classes per week, I will walk you through all of the material, give you all of the tricks and tips that I've learned, and it's going to speed up your learning process. If you're a bit of a procrastinator, maybe you're worried that you're not going to do the work, not going to go through the lessons, well, when you do it with me, I'm going to make you go through it. So that's one of the benefits of mentorship. It's the same knowledge that is in the Education Center online. It's just me teaching it to you personally. So the mentorship course, I limit the size because I want to have a relatively small number of students so I can help them along. So it's limited to 15 people. We have 4 spots left. So if you have an interest in doing the mentorship, you should get on it quickly, and I'll show you how to do that in just a moment. Here's a little feedback on the mentorship course, and I'm going to pull up, let me just got to fix something here. I accidentally shut down my browser, so I'll leave this up for a second. And I'm just going to open up my browser. You guys should still be seeing the mentorship screen, or the feedback form there, while I'm just logging back into the website. Okay, so I got that back. Okay, so you can, watch this as a video if you want to read this in detail later. It'll be on the video. So Stockscores Active Live is a service that's only available to my active trader students. And Active Live is watching my analysis screen. So the same screen that I'm watching all day for signals, you watch it as well. It's just done by a webinar. It's real time, it's live. It gives us automated instant signals. Most of the signals we don't do anything on. We're looking for certain ones, but we get little voices calling out signals, and then we assess the trade as they come along. Now it's doing that for 6 or 7 different strategies, but I recommend you only be focused on 1 or 2 when you're starting out, especially. I'm only typically focused on 1 or 2 strategies through the day, but some people want to swing trade, so they're going to focus on the swing trade signals. Some want to do really fast trading, so they're going to focus on the moonshot signals. Some are a little more patient. They want to let the trades develop, so they might focus on the IPB or superhero signals. This service is only available to Stockscores Active Trader members. It's a subscription service. It's $245 a month, but you have to be an Active Trader member first, and all Active Trader members get a free month so they can try it out. This is the screen. This is what it looks like. And so you can see here all of the analysis being done. I've already shown you this a little bit tonight. Now, in addition to the online material, and coming up November 3rd, I'm going to do 2 classes, which will lay down our theory. So 1.5 hours long, Monday, November 3rd, Tuesday, November 4th. And then we're going to do market scanning Wednesday, Thursday, Friday. So that's more for the investor. For the active trader student, you're going to get a free month of active live, which you can use anytime. If you want to save it until June, save it until June. The only thing is that you have to do it on a calendar month. You can't really join in the middle of the month. So for example, October's month ends October 31st, and then we start November 3rd. So you just send me an email. If you have your free month and you want to use it, you just send me an email saying, hey, Tyler, I'd like to use my free month, and I'll send you the link for that month. All classes, the overview classes, Monday and Tuesday, the market scanning classes, those are all recorded. I do not record the active live sessions. They're running all day long. Some of my students will record it on their side, but there's not a lot of talking. Most of the time we're just waiting for trades to come along. So it's, I do record lessons at the end of the day. When I do a lesson, I do 5 or 6 a month, and those I record, but general trading through the day, we don't record. Now, the special offer is for anyone that registers for the investor course or the active trader course before Friday, October 31st at 11 p.m. We'll get these live classes for free. They'll get the active live month for free if you're an active trader member. And if you do the mentorship, you also get an active live month for free. Here's the cost. We talked about this the last couple of days, so I'll go through this pretty quickly. But you get $500 off if you use these discount codes. So at checkout, enter in this discount code for the investor course, you get $500 off. Do this for the active trader course, you get $500 off. And just remember, you get all of the investor material is included with the active trader course. Now, I've had a few people asking me about the mentorship. So let me explain how you register for that, because again, there's not many spots left. So you first have to purchase the active trader course. So you go to the Learn How to Trade, and you scroll down the page here, and you click Order Active Trader. And you go through the process, you buy the course. Once we activate your account, and there's a little bit of a delay before your account is activated, but you'll get an email when your account is activated. At that time, log out of the website, log back in. The website's now going to recognize you as an active trader student, which makes you eligible for the mentorship. And then you go to upcoming events, and you scroll down the page to mentorship right there. And that's where you can then register online, and it will charge you the $2,000 upgrade for the mentorship course. Now, if you're already an active trader member, you can just do this right away. You don't have to buy the active trader course first because you've already done that, of course. Okay. And as I said, we have 4 spots open for that. All right, so throughout the presentation tonight, I've been talking about the reward for risk ratio. And what I'm going to now elaborate on is how much capital you need to trade with, how much you should be risking on each trade, and sort of the goals in terms of profitability. So our number one goal is capital preservation. I want to say that above all else. Number one goal, capital preservation. And so when you start trading, it's really important to practice for a while. To not trade with real money, just simply practice. And then once you are experienced on paper, you're showing some success on paper, then you can start to trade with real capital, but start with a small amount. I don't care if you have $10 million to invest in the market or trade with. Start with $5,000. Start with something relatively small, even less, $2,500. So I'm going to go through the economics of that. The key things is to make money in the market, you have to have a good relationship between the size of your losses and the size of your profits, and then your probability of success. So if you can have your average profit double the size of your average loss, and you're right 2/3 of the time and wrong 1/3 of the time, by being consistent, you can do very well in the market. And that's the key, is smaller losses, larger profits, and consistency with your success rate. So if we go into this little spreadsheet I've built here, I've started with a starting capital of $5,000. So for most people trading, that's a reasonable place to start. Again, you can start with 1,000, you can start with more, but I wouldn't start with a lot more because again, there's a learning curve here. And my recommendation is to never risk more than 2% of your capital on any one trade. Now I want to be clear, when I say risk, that's not the position size, that's how much you are risking on the trade. So if you buy a stock at $1 and your stop loss point is at 90 cents, then the risk on that trade is 10 cents a share. And if you don't want to lose more than $100 on a trade, then you would buy 1,000 shares, because 1,000 shares times a loss potential of 10 cents a share is $100. And if you have a $5,000 account and you're risking $100, that's risking 2% of your capital on that trade. And I think that's a good place to start. So if you're starting with $2,500 of capital, then you would do a $50 trade risk. Now, as you gain experience, as you find success, your capital is going to grow. And that's where we go back to the spreadsheet, because the goal, and I think a reasonable goal, is to earn a reward for risk. You see here weekly RR of 15. Now, through the presentation, I've been showing you trades and what their reward for risk were on today's trading. And so we had SCNX had a 5 and then a 3, and NUAI, and you know from the presentation what I was driving home there. If you can do an average RR of 3 per day, now some days you're going to have 6, some days you're going to have -2, not every day is going to be a successful day. But if by the end of the week you can do 15 RR and you're risking 2% per trade, then this is how your capital can grow. Because your risk tolerance for week 1 is going to be $100. If you earn an RR of 15, that's a $1,500 gain, meaning your closing capital is now $6,500. That rolls over to the next week, and now your risk per trade is a little higher. And you can see that as time passes, the risk per trade is growing until it tops out at what I consider the maximum risk, which this is Canadian dollars here, because I'm Canadian, so I built this spreadsheet for Canadian and then converting to US. So this is my max risk Canadian dollars. This is my max risk for US dollars. And I could change that. I could put my max risk at 1,000, whatever you're comfortable with. But when you get up to your max risk of 5,000, then you start to see the maximum gain per week. And this is where you really start to grow. None of this is possible unless you are consistently earning 15 RR per week. And you're going to start that process at a very small amount of risk, a low risk tolerance relative to your capital. And this way, you're not going to blow up your account. Because if you're only taking a small amount of risk and you have a bad week, then you're going to go back to trading with no capital, no risk, just paper trading again. But if you're successful for the week and you earn your 15 RR, then you're going to bump your risk tolerance per trade up a little bit. And then the next week, if you're consistently at 15 RR again, you're going to bump up your risk tolerance, and so on and so forth. And this is a simple way to take baby steps, one step at a time, desensitizing yourself to risk, letting your capital grow. And again, the number one priority is preserving your capital. And so if you want to learn how to do that, obviously I'm here to teach you the strategies. I give you the tools, I give you the indicators. We're going to elaborate more on the tools, the knowledge, the indicators during Saturday's webinar. So please make sure you're registered for that. You can go to stockscores.com to register for that. And of course, we'll take lots of questions about the courses, about the indicators, how they work. I'll show you TradeStation a little bit more and how those indicators plot. I'll show you some trades, perhaps from Friday's trading action as well. All right, well, I hope you've enjoyed tonight's presentation. If so, do me a favor, if you're watching the video, click on the like button, subscribe to the channel, and as always, most importantly, trade well.